Hi, how's it going everyone? My name is Henk and welcome back to the channel. So today we're going to be talking about the best performing stock on the New Zealand market in the month of November. Now, this particular company shares has been up by more than 80% in the month of November. And this easily beats out companies such as Fletcher Building and Air New Zealand, which have both had a pretty good month of November themselves. And they were both up by more than 30%. If you want to take a quick guess of which company it is, I'll give you 2 seconds to quickly leave your guess down in the comments below. Okay, time's up. So the company that I'm talking about is Evolve Education Group with the symbol EBO. They are up by around 84% for the month of November, and I have briefly mentioned them on my Instagram page a few weeks back, and that is where I provide some quick stock market updates, so be sure to follow me there if you are interested in that. The rise in their share price has been so dramatic that they have been asked by NZX to explain the sharp rise in the share price, and they simply said that the price changes were all coincidental. Well, whatever you say, my friend. Who exactly is Evolve? Evolve Education Group provides early childhood education in New Zealand and Australia. They operate Lollipops, Active Explorers, and Little Wonders childcare centres with more than 127 childcare centres across New Zealand and Australia. They have definitely benefited from the relief payments from both New Zealand and the Australian government, which saw them receive more than $11.8 million in wage subsidies, which they use to keep their employees employed and not just line the pockets of their shareholders. Looking at you, Ryman Healthcare. But this is the thing, many other companies also received wage subsidies, but their share price did not suddenly rocket up by 80%. So this was just a really peculiar situation all around. I wanted to find out why there was such a dramatic jump. Looking at their latest results announcements, their revenue for the past 6 months for the company fell by 5.8% to around $65 million compared to the same period of time last year. Now, this again may be attributed to the shutdown that's been happening during levels 3 and 4 throughout March and July, where no childcare fees were charged during that time. And this is exactly where the wage subsidy has really helped out with the company, because they have actually posted a net profit during the same period of time of around $6.2 million, up from a loss of $1.4 million over the same period of time last year. Overall, Evolve Education had a very small growth in their revenue over the past 5 years, of around 5.7% per year. And in the last couple of years, they actually have a decrease in their revenue. And they have not been profitable in terms of after-tax earnings over the past 3 years. However, some analysts are predicting a 65% annual earning growth over the next 1 to 3 years. Now, do take this figure with a grain of salt because it's only based on one analyst. If we take a long-term view of the company's shares since their IPO, over the past 5 years, the company's shares have lost over 80% of its value at its lowest point back in March of 2020, and that is certainly not a good sign. Even taking into account the recent increase in share price, the share price has been down from around 50 cents per share back in 2015 to around 16 per share currently, and that corresponds to more than a 60% drop in the price. Looking at who's actually owning shares of Evolve, insiders currently hold around 24% of shares, while private companies and institutions own around 60% of the shares, leaving around 16% to the general public. This means that institutional investors can have a huge influence on the share price, which means that you should be extremely careful if you want to purchase shares in the company. Now, in general, individual insiders holding the shares of a company is considered to be a good thing because they still believe in the company itself. to be invested in it. Now finally, just as a disclaimer, I do not personally own any shares in Evolve Education. On one hand, Evolve Education may not be the best choice for long-term investors due to its lackluster growth in both its revenue and its earnings. On the other hand, these huge fluctuations with the share price may mean that they could be a good potential option for short-term traders that are willing to take a punt on the big swings in share price and make some profit in the short term. As of today, Evolve has been down by around 7% from its recent highs of around 18 cents per share. Now, if you are a short-term trader, it might be pretty difficult to pick out the exact bottom of this current downtrend. A good place to start looking, though, would be around where there was a lot of previous resistance, which is around the 15 cents per share mark. So if the price keeps on dropping until it reaches around the 15% mark and then start bouncing back, they may be a good entry point for short-term traders. But again, anything could really happen with this particular company. So just be careful with that and don't invest what you cannot afford to lose. As always, the easiest way to purchase company shares in New Zealand is with Sharesies. There's a link in the description below if you're new here, where you can sign up and get some free credits. And as always, I will see you in the next video. Peace.